Hi guys, this is our first video of the series we're starting from today, and it is understanding the market as a beginner, exactly from the bottom up. We're gonna discuss every way in which the market moves, how we can trade it, what are the best ways to trade it, right? So let's get right into it. Now, the first and foremost thing as a technical trader, especially if you're trading in a smaller time frame, let's say, from a day to 1 hour, 5 minutes, anywhere between that, the first and foremost thing is to identify what kind of state is the market is in, right? So the market can only be essentially in two states, right? It can be either in a trend, that means it is going something like this, right? This is the one way the market can be in. This is a trend, and the only other way the market exists is a trading range. Right, this is the only two phases the market can be in, right? The first and foremost part of entering or going into a market, putting on a trade, whatever time frame you're in, right, is to recognize, is the market in a trend or is the market in a trading range, right? All time frames, including the 1 day to the 4 hour to the 1 hour to the 15 minute to the 5 minute, all of them are in one of these two stages, right? If you can't identify it, you essentially can't really trade, right? Because you don't understand what the market is and how the market is behaving. It is extremely important to understand how the market is behaving in this current scenario, in your time frame, in the last 25-30 minutes, or in the last 2-4 hours, or in the last 15-20 days, 1 month, right? So first I'm going to give you an example of that, right? First we're going to stick to trend, right? So what is a trend? A trend is anywhere where the market is constantly creating higher highs, higher lows, higher lows, right? It can also be if the market is creating lower lows, higher lows, lower lows, higher lows, lower lows, higher lows, right? So the swing is to the bottom. Here the swing is to the upside, right? Mostly, right? You can clearly spot them, right? And I'll show you examples. And we'll not stick to one time frame, we'll stick to multiple time frames, right? So I'm gonna show you a couple of assets. Look at this asset, Euro USD. What is it doing right here? It's in a trend. How can you spot that, right? Easy. Going up, going down, going up, going down. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Right? Easy spot a trend, right? The more you can identify, the more money you can make out of it, right? This is just one asset. Let's go to some other asset. Let's go to ETFs, and this is what applies to everything. So I have a couple assets in there. I have the oil, I have the gold, I had Nifty, the Indian indice, Nasdaq, everything. We looked at Euro USD. Let's look at Nasdaq. What is the Nasdaq doing? If you look from a very broader perspective, it's going up, it's going up, coming down, going up, coming down, going up, but constantly creating new highs. Now within these there are multiple times when it will be in a range in a smaller time frame, but on the bigger time frame it's still in a bull trend, right? It's still in a buy kind of scenario, even though on a shorter time frame, let's say on the 1 hour time frame, it might be in a trading range, but we're not going to discuss that. The first and foremost part of the market, the first part is all going to be about identifying how the market is moving, right? Let's look at another one, Nifty. This is a little tricky one because the market gaps down and up a lot. But if you zoom it out, you can clearly see that the market is in a trading range. Right? It was in an uptrend, but after that, since then, it is in a trading range. It goes down, up, 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 down. Cannot break to either side, right? Cannot break to either side. It cannot go one side very clearly for you to identify that now it is in a trend. But looking at this, what would you say? It's in a trading range. Now if you were isolatedly looking at, let's say, once again, let's say we're looking just right here, just here, you would say it's a bull trend, right? It's clear, it's a bull trend. The market is going up and up and up, right? That's a bull trend. But on the bigger time frame, it's still a trading range. Let's look at gold. Gold. What is gold doing? Clear uptrend. clear uptrend. After that, what is gold doing? Now it's in a trading range. It's going bearish, but it's still in a trading range because it's not able to break this high, not able to break that high. It is going coming down, right? Still, for the most part, trading range. And most of the patterns you see on the higher time frame, most of them will be part of this, either a trend or a trading range. Let's look at oil. What is oil doing? Again, trading range. Though it has just broken out, this is a breakout. This is the way when the trend started. But after that, hasn't gone anywhere. Hasn't moved in either direction. So what is it? It's a trading range. Very simply. The more you identify what kind of what kind of structure is the market in. Again, this is an ETF, iShares Russell 2000. Again, what is it? Bull trend. Simply bull trend. You can't deny it. You're seeing it clearly on the market. Now, what is the advantage? What is the point of identifying the first trend? Is it in a trend or a trading range? Because you can trade according to that. Whenever price is in a trading range, right? It's going up and down. It is always better not to hold your trades. It is always better to buy low, sell high, exit the market. Right? Don't hope for breakouts, because most often than not, the market will continue to be in a trading range for a long period of time, and you can't predict this as a technical trader. If you're a fundamental trader and you have a lot of knowledge about what is going on in the market, what are the current trends, what is the current sentiment, and obviously you need different skill set for that. But as a technical trader just trading in the smaller time frames, you need to just buying low, sell high in a trading range, right? That's the most basic of it. You do that, you'll be profitable. It is not rocket science, right? And in a trend, what should you be doing, right? One second. What should you be doing? At every pullback, you should be buying. Now there are going to be multiple trends in this one. Like it's going to be this, probably this, and then it goes there, right? But on the broader, it will always be here. So essentially, whenever it comes back, right, to some of these lines, you can look to buy. You have a simple line here. You can look to buy on any of these lines to make a profit. And it is not just more ideal, you will make more money out of it, right? You will always make more money when you're with the trend than not with the trend, right? Even when you don't identify it, right? Even though you're not looking at it right now, and you think that, what, maybe the trend is not going to continue, it's going to be a reversal. But more often than not, the trend is going to continue. It's going to continue for a long time, and you're going to make more money out of it. Now, this is valid for every asset class, irrespective of what it's doing. Right here, if you look at the current chart, what is the market doing? It's in a trading range. It is so clear that it's in a trading range, right? And these trading ranges give you opportunities, different kind of opportunities. Obviously, we're going to discuss them in detail in the later episodes. But for the first one, the first and foremost part is mark out all your charts. Always, whenever I go into the market, now I'm on 1 day, right? But you can be on any chart any day. You don't have need to have a problem. You can be on any chart any day, and you can identify it very simply. What was the market doing here? The market was bearish, right? What is the market doing here? It's in a trading range, right? It's doing nothing. It's just going up and down, up and down, up and down. It's doing essentially nothing. It's in a trading range. Simply identifiable. Any chart you look at, not hard to identify. Very easy to identify, I would say. Now you already have a trend, a little trend. What? Going up. Before that, what was the trend? Coming down. Where do we have a trading range? Trading range. Simple to identify these two things, and they are as important as anything in the market to identify. Once you identify these basic things, you can very much trade ideally, likely, how you think is possible. Obviously, we're going to discuss that in the next chapters, but that is it for the first chapter. Please mark out your charts, whether the market is in a trend or a trading range. You will get a lot of help out of it. And keep following my episodes to learn more about how the market moves, how you can trade it, and how you don't need any specific indicators, any specific strategies to trade the market. Okay, guys, see you in the next one.